Who should you go to for advice? Author, TV personality, and celebrity financial coach, Lynn Richardson.
Just bringing financial expert Lynn Richardson.
My girl, Lynn Richardson.
We have Dr. Lynn Richardson. Good morning.
Financial expert Lynn Richardson.
Lynn knows what's up.
Lynn Richardson is a financial coach and also the author of Estate Planning Made Simple. Okay, good to see you.
Joining us now, life coach and financial expert Lynn Richardson.
We're joined by financial expert Lynn Richardson, author of Get Your Money Back, Tax Deductions You Never Knew About.
Be at peace with the money that you have, because everybody knows money cannot buy happiness.
To learn more about Lynn Richardson's webinars, books, and online courses, please go to lynnrichardson.com.
Well, hello. I am so excited. We are on the journey to financial health and wellness, and we are on this journey together. I, too, am on this journey. I am actually taking another look at my estate plan and some insurance policies and some other things. So we've had such a great time here together over the past 8 weeks. And so this week, we are going to talk about strategy, questions and answers. And I'm going to try to answer as many questions as I can to help you navigate those next steps and make your journey to financial health and wellness an actual reality. Thank you so much to the Delta Research and Educational Foundation. Thank you to Toyota. Thank you to each and every one of you who has been committed to this, who you've seen me at different places and said that you're in the class. And that it's helping you. And so it's very helpful to me to know that it's helpful to you. So why don't we get started? Our co-moderator for today, or our assistant for today, is going to just go through questions, and we're going to try to get as many of them answered as possible. I'm ready. I'll be ready for the first question whenever you are. And as you all know, sometimes technology does not cooperate with us. So if there are technical difficulties, please advise. Excuse me.
Thank you for being patient with me. I apologize for.
No problem at all. Just wanted to make sure it wasn't on my side.
No, it's okay. So I want to make sure that you can hear me, and then I'm going to give you the first question.
Excellent.
Which is the better option, the reverse mortgage or the home equity line of credit, assuming that you are either eligible? That's the question. Which is better, the reverse mortgage or the home equity line of credit, assuming you are eligible for either?
It all comes down to the numbers. So you want to line up the numbers, and numbers do not lie. So you want to get an analysis for a home equity line of credit. A home equity line of credit is going to be much more useful if you're okay. You don't really need any extra cash every month, but you want to have some extra funds in case of an emergency. And you're willing to make that monthly payment every single month when you start to use any of that line of credit. However, if it is a reverse mortgage, remember the whole idea of a reverse mortgage is to help put some money back into your pocket immediately, to eliminate the mortgage payment and therefore be able to sleep at night, so you don't have to worry about whether you're going to pay your bills, your mortgage, or get your medicine. So if your reserves are very low, if your cash flow is extremely low, if you're finding it very, very difficult to make ends meet, then the reverse mortgage may be the better option. But if you're okay, you just want to have that extra security blanket, then the home equity line of credit may be the option for you. But at the end of the day, it's going to come down to the numbers. What do the numbers say? What does it look like? So unfortunately, when you're dealing with numbers, you can't make assumptions. You have to actually go through the process and see what the numbers look like so that you can make an objective decision rather than a subjective one. But that's an excellent question. Thank you for asking it.
Is it acceptable decision to take advantage of both of the opportunities to access additional funds?
If you are looking to do a reverse mortgage and a home equity line of credit, that is not going to work. So you've got to pick one. So you want to take a look at the options and then you want to go from there. So what you want to stop doing, you want to stop speculating. Okay. You want to actually, because if you actually look at the numbers, if you go through the process and you go and get an analysis for a home equity line of credit, and then you get an analysis for a reverse mortgage, which means the mortgage company is going to be paying you, then you're going to see very quickly with your own two eyes and with the numbers that you see on the paper, you're going to see no one is going to be able to tell you which one is best until you actually go through the process of getting a diagnosis for your situation.
And how do we reach someone within your organization to help me get started with the reverse mortgage?
We do not do reverse mortgages within our organization, but what I recommend that you do two things. One, I recommend that you Google reverse mortgage, and you will find that there are some very reputable companies who do reverse mortgages, and then go from there. The second place where you may want to take a look, you may want to ask your financial advisor or your financial professional. The third place that you want to look is you want to Google HUD, HUD, and reverse mortgage, and find a reverse mortgage counselor who is assigned by the government, the Department of Housing and Urban Development, to see if they have any approved lenders there. But I do not have any approved lenders, and I do not have the authorization to release one here. I want to make sure that you go through the proper channels to find one that is reputable, that is within your qualification.
I have watched financial experts on YouTube who claim it's a mistake to pay off old debts that are already in collections. Is this true?
So I never dispute what other people say, because I don't know the full state of that conversation. I don't know what they said. I don't understand the context in which they said it. So I'm never going to say what someone else said is or is not true. I prefer that you actually do your own research and then you figure out what makes sense for you. And so when we talked about regaining your credit, and we talked about your credit health, what did we say? We said, treat people how you want to be treated. Treat your creditors as you'd have your debtors treat you. So within that philosophy, I believe it is always in your best interest to pay off your creditors, because you actually owe the debt. Now, if you don't owe the debt, then it's okay. But I do not have a philosophy or any system that's based in dodging what it is that you rightfully owe. If you're going to not pay, then you want to consider bankruptcy. Bankruptcy is the legal way to get out of paying a debt that you owe that you are not able to pay. Bankruptcy is the legal way to get a fresh start. So I don't have a middle ground. I don't have a middle ground that says, well, you don't really have to pay them. If you took the debt and you owe the money, pay it. If you cannot pay it, then go consider bankruptcy.
And how do you strike a balance between working hard for multiple streams of income versus a hustle culture that leaves us burnt out and can affect mental and physical health?
So if you are looking to have multiple streams of income, what you also need to have is a coach. You need to have a coach. You need to have a mentor. The reason why people who study or train for the Olympics, the reason why they have a coach is because the coach is going to tell them what to do, how much to do, and when to rest. Unfortunately, too many people think that becoming financially free, you think it's just like going to get a college degree. It's not. If you go to get a college degree, there's pretty much a system and a format for that. You go, you take these classes, you pass them, you get the degree. But building multiple streams of income requires mental health, physical health, emotional health, psychological health, creative health, understanding witty ideas, understanding that everything is not about balance. Balance means everything is weighed maybe the same, but I never aim for balance. I always aim for harmony, because sometimes I have to spend more time on something that is a priority and less time on something that may not be as big of a priority as that. I'll take my family, for example. When I made the decision to be one who has multiple streams of income, my kids were young. That meant I could not balance my time and go to every ballet practice or every cheerleading game or cook dinner every single night. I had to spend the time that it took for the business. And guess what? It paid off. It was harmony, but there was not balance necessarily. And within harmony, everybody understood the goal, and we were all team members working together. So I highly recommend, if this is a question for you and you don't know what to do, I recommend that you get a coach. Any more questions?
Yes, I apologize. I was on mute. All right, here we go. I am 73 in relatively good health, retired, have a home-based business, consulting business. I have no children. Bequesting my body to science. Question 1. I would like to know the best strategy for utilizing bequest trust funds, pay off home mortgage, pay off timeshare, and add to the limit for the IRA.
So the best way to do that is to get an analysis. What you want to do is you want to schedule a consultation with a financial coach. Maybe it's someone on my team, an estate planning attorney. Maybe it's someone that we could refer you to. And you want to actually take a look at every single number and then figure out what's wrong, what's your situation. Unfortunately, I'm unable to provide you with a diagnosis. What's happening is you're calling the doctor coughing, wanting to know if you have a cold, if you have bronchitis, if you have pneumonia, or if you have COVID. Guess what? The doctor can't tell you until they actually do a diagnosis and run some tests. So it's the same thing with your financial strategy. You're actually going to have to sit with the financial doctor and let the doctor take your vitals and look at all of your paperwork and then line up the best answers that are for you based on your situation. There is no vague answer that can give you a real solution. I often always say there are no easy answers to hard questions. So those hard questions actually require an analysis with real numbers, looking at your situation so that you can better understand what your next steps are.
And second question, is it too late to get life insurance long-term care rider?
It is not too late to get life insurance or a long-term care rider. It is not too late.
Okay. All right, that's what I have here. And let's see what we have going on live now. Okay. Okay, I don't see any questions live. Were there any questions live, ladies? I don't see anything.
There are 3 live questions.
Okay.
They're actually under the starred category.
Tonight, unfortunately, that section is not appearing.
Thank you.
Okay, so I'll read it for you. I see it.
Awesome.
Okay.
If you have multiple businesses, would you need separate rooms for them all to be considered home-based businesses, or would you have to choose only one as your home-based business?
If you have a home-based business or you have multiple home-based businesses operating under different entities, you can leverage each and every one of those home-based businesses and work from your home office. You will then need to keep very good records so that you can determine the percentage of time you spend on each home-based business in your home office. Now, if that's too difficult, then you can choose one of your businesses and say, this is the amount of time that I'm spending in my home office, and this is what I'm doing in my home office for this specific business. Remember that the whole idea with getting more tax deductions is to follow the rules of the game and then play the game by the rules. Learn the rules of the game and then play the game by the rules. So one of the courses in New Wealth University is all about the home office, what it must look like, how it must be set up, several of the things that you must have in it, the documentation that you can provide. And so that's a whole 90-minute to 2-hour course that if you are really, really interested, you want to make sure that you take that course. However, you can also go to irs.gov and you can search for the home office deduction workbook, and then make sure that you check off everything that workbook tells you to do in terms of your home office. But yes, you can have multiple businesses operating out of the same home office, or you can have one. It's completely up to you.
Okay, and the next question is, I have different hobbies that I do and I can do. Would I keep separate books for each and file on individual 1099?
So here's the deal about hobbies. Hobbies are not businesses. So you can do whatever you want with that hobby, but you cannot claim it as a tax deduction. You cannot claim it as anything that even resembles an IRS deduction of any kind. So when you say you have a hobby, then that is work that you're just doing. It's not with the intent of making a profit. Now, if you make money doing your hobby, so let's say you like to you like to knit, and every now and then you may sell something that you knit. Yes, you have to report the income from your knitting hobby on a 1099 or whatever the person who paid you gives you, but you cannot claim any tax deductions for your hobby. The definition, or one of the defining factors in claiming tax deductions, is that you are running your business like a business with the intent to make a profit. And a hobby is not a business, and there is no intent to make a profit. So you would fail that test. And unfortunately, I would not want you to get audited. So if we're talking about hobbies, we are not talking about tax deductible items.
Okay, thank you. The next question. What professionals do you recommend that you have lined up? For example, financial planner, estate attorneys, etc. Do you have any that you specifically recommend?
Excellent. Those are excellent questions. 1, you need a life insurance agent. 2, you need a mortgage professional. 3, you need a real estate agent. 4, you need a real estate attorney and a real and other asset acquisition attorney. 5, you need an estate planning attorney. 6, you need a trademark attorney. And they typically are 3 different things for 3 different areas. 7, you're going to need at some point a financial advisor to help you make the right investments and or to help you set up your own solo 401k and some of those other things. So those are the 7 people that I recommend that you have on your team. And of course, you can always have a financial coach. In my Master Financial Coaches Bootcamp, I train my financial coaches on every single area of the financial services industry. So they don't do it for you. They lead you to the right place so that you can make sound decisions. The difference between a financial advisor and a financial coach is a financial advisor typically is licensed by FINRA, and it does investments. Whereas a financial coach is not licensed by the government. Instead, this person has a wide knowledge of many different areas of the financial services industry and can lead you to the next best step for you. A financial coach will help you with budgeting, overspending, credit, and any of those areas. So that's an excellent question.
Okay, the next question. If you are married, do both you and you're going to file for bankruptcy? Do you and your spouse file, or just the one with the highest debt?
That's up to you to decide. So I can't say who should or who shouldn't without looking at all of the debts. In the event that you do file bankruptcy and your spouse does not, if you have any joint accounts that are included in the bankruptcy, that account will show as included in bankruptcy on both people's credit. Okay, so that's something that you're going to want to sit down with a bankruptcy attorney, and typically your real estate, your attorneys who do business transactions will in many cases have knowledge of the bankruptcy laws, and you want to then figure out what is the next best step for you. But that's not an easy question to answer because you have many different assets to look at, you have tax implications to look at, and you want to get a proper assessment.
Okay, and then the next thing is just the calculator. So I guess they want information about using the calculator.
Okay, we will teach you how to calculate a mortgage payment, how to calculate a car note, how to calculate the interest, how to do amortization on that calculator, and we will make that link available at deltafoundation.net and also at lynnrichardson.org. That will be available immediately.
Okay, thank you. And the next question, can you please review having a will versus setting up a trust?
A will is insufficient. I'm going to give you the very, very simple answer. A will is insufficient. A trust provides more protection. A will is insufficient and it can be contested. And it doesn't matter if the person who contests the will is telling the truth or not. Once they contest the will, then your assets are going to be in probate. Probate is not for free. Probate costs money. So the main thing you need to know about a will versus a trust is that a will can be contested and a trust cannot. So therefore, you want to meet with an estate planning attorney so that you can go over the steps to get to have a trust. If you have a home, if you have insurance policies, anything, you do not simply want to leave those items in a will because the will can be contested. You may have never had any children. Somebody may say, I'm her child or I'm his child. You may have never been married. Somebody say we were married. There's so many reasons why a will can be contested, but a trust cannot. So you want to definitely move forward with the estate plan and set up a proper trust.
Okay, the next question. I am planning on using funds from a bequeathed trust. Should I pay off the mortgage, then timeshare, then add to an IRA?
I had that question earlier, and you're going to want to sit down with a professional to get those questions answered. I cannot answer such a specific question with no knowledge and with no numbers.
Okay, thank you. We want our first home to be income property. Can we invest with friends and still take advantage of first-time home buyers programs?
I don't understand the part about invest with friends. Either you are operating as a first-time home buyer or you are not. If this is an investment property, then you're going to have to be honest and state that it's an investment property. If you are a first-time home buyer and you have friends giving you money towards the property, then that money is going to have to be very clearly defined as a gift. It cannot be an investment. So you've got to make a decision between, is this an investment property for you that you are getting into with multiple other people, or is it an actual residence you're going to live in and take advantage of first-time home buyer programs that require the owner to occupy the property? So that's a decision that you're going to want to make. You're not going to be able to have your cake and eat it too there.
Okay. Explain the 10% giving once more. Should 10% be all tithes? And this is multiple questions. So you want to answer that one first and then
the 10% can be whatever you want it to be. There are no rules. No one's going to come and hang you at the stake. It's a concept. It's a principle. It should not be treated with such harsh boundaries. Whatever you decide the 10% is for, it's up to you. What's the next part of the question?
Okay. What about other organizations we may donate? Is that an additional 10% or should it be split with the tithes?
Are there multiple parts of this question? Why don't we go on and ask them all? Because I think my answer is the same.
Yeah, that was it.
Okay. Yeah, it's up to you to make that decision. I wouldn't overthink it.
Okay. What is the acronym for WEALTH?
The acronym is Wisdom, Expansion, Assets, Leadership, Transformation, and Health. Wisdom, Expansion, Assets, Leadership, Transformation, and Health. That's what wealth is.
Okay. I have a ministry as an LLC, not a church. I do books, conferences, etc. Do you think I should leave that as it is and start a home-based business or try to apply what we learned to increase the ministry?
I'm not exactly sure how to answer that question because I don't have enough information. If you are running the business like a business with the intent to make a profit and you operate the majority of your administrative tasks from your home, then it is a home-based business. However, if that business has a separate location where you do the work, if there's a building or what have you, then it's not a home-based business. Now, whether or not what you do in your work is also your ministry, that is a whole separate matter. The IRS does not address ministry. Let me repeat, the IRS does not address ministry when we're talking about a home-based business and tax deductions, okay? As a matter of fact, there could be very many different conflicts. So what you need to do is you need an analysis with someone so that you can go over and see very clearly what you are actually doing, what it is that you want to do. Is it in alignment with your goals? What are your activities? And do an analysis to determine whether you should stick with that one business or whether you should do something different. And what you're going to find here with many of these questions is that there are no easy answers. If there were easy answers, if I could say 1 + 1 = 2 to most of your strategy issues, then I would say it. But it's just like saying, I want to build a building. If you want to build a building, you need plans. Let me repeat. If you want to build a building, you need plans. If you want to build a business, you need plans. If you want to build a financial strategy, you need plans. If you want to create a financially healthy, wealthy lifestyle, you need plans. There's no way around plans. If we did this class 365 days a year, every single day for the next 20 years, it still would not substitute for the plans. So you must have plans.
Okay, thank you. Do I have to have a home office in order to have a home-based business? I live in an apartment and I do not have an area that I can dedicate only for an office.
Tax deductions are not a requirement. Tax deductions are an option that you get to choose. So no, you are not required to have a home office. That is up to you to decide if you want to use a particular space, whether it be a little corner, a desk, and it's up to you to decide if you want to be able to write off your rent and your light and your gas and electricity and some of those other things and your computer and all those things. That's up to you to decide, but it's not a requirement. Okay, are we done with our questions?
No, she's coming back in. Her
Oh.
her system just went out. Hold on a second. Let me see. Where did we leave off? You answered the question already about living in the apartment. Okay. Will a CD at 5.25% something to consider as a high yield savings account?
A high yield savings account and a certificate of deposit are two different things. They are not the same. So you cannot consider a CD as a high yield savings account. A high yield savings account is one thing, a CD is another. You do not substitute one for the other.
Okay. If you have a home-based business, should it be registered as an LLC? I'm in the state of Virginia.
It's up to you to decide if your home-based business is operating as a sole proprietorship using your name, your social security number, and your date of birth, or if your home-based business is operating as an LLC. That's up for you to decide. One of the things that I said about an LLC is it gives you protection of the corporate veil. So what you do in your business is separate from you as an individual. So if something happens and you get sued or something like that, if you have an LLC, then your personal assets are protected. So that's something for you to consider based on your budget, based on your goals, but it's up to you to make that decision. You cannot be forced to do an LLC if a home-based business using your name and your social security number will suffice.
Thank you. My mom lives in my second home. There is a mortgage on the property. Am I able to convert it to a rental property without being penalized? I've owned the property for 7 years.
So what you're going to want to do is you're going to want to sit down and do an analysis with a tax professional to understand what those penalties are. Okay. So if it's a rental property and you are collecting rent and then using the rent to pay the mortgage, and then you are looking at deducting other things, you want to actually sit down and do a side-by-side analysis to determine if it's better for you to keep, I guess, lending the space to someone else or actually renting the space to someone else and collecting rents and royalties. You're going to have to do a side-by-side comparison to see that. You're not going to be able to get that answer as a generalization. You're going to need the plans.
Thank you. This question is actually similar to the other question. Will a CD at 5.25%, something to consider as a high yield savings account, minimum amount $500 for 6 months?
Yeah, that's again, a high yield savings account and a CD are two different things. You'd have to read all of the terms of the CD and then all of the terms of the high yield savings account to determine if that's a good match for you. I can't give a general answer to a specific question for two different financial instruments that do different things. A CD typically has a fixed amount of time where the money has to stay in the account. A high yield savings generally does not. So based on some of those factors and some of the other fine print, you're going to want to take a look and compare before you make that decision.
Thank you. In having a home office, can you only have business items in your home office in case you're ever audited?
Correct. Your home office should only include business items, and only business should take place in there. You can't sit in there and watch TV. You can't let your in-laws sleep on the couch in there. It has to be used exclusively for business.
Okay, thanks. I want my 14-year-old relative to do some work for me on my new children's book. How do I hire him formally and within IRS guidelines as he is a minor?
So you're going to want to either take the class, How to Hire Your Kids. That's a great, great, great class to take. You may also want to take a look at your Business and Budgeting Journal. The Business and Budgeting Journal was made available in week 1. And at the end of that Business and Budgeting Journal are steps for how to hire your kids. And then the third thing that I would say is hire them. Go through the proper steps. Hiring a minor or hiring a child is no different than hiring any other regular person. Now, you may want to take a look at your state labor laws. You may want to take a look at what kind of work that person is doing. But in the Business and Budgeting Journal are the steps for hiring a child. And there's also a class called How to Hire Your Kids at New Wealth University. And you can go to asklyn.org to get access to that class.
Thank you very much. If an LLC gets taxed as an S corp, what is the correct way it gets paid by a third party?
I have no idea what that question is alluding to. I'm going to save that question for a tax preparer. You're going to want to make sure you ask a tax preparer. I do not prepare taxes. What I do is I teach people how to get prepared for the tax preparer, but I don't prepare taxes.
Thank you. I asked about reverse mortgage and getting insurance for it. I was told this was not possible. Is that true? And will the insurance make sure the home can stay in the family?
If you have a reverse mortgage, you have an option to go and get a life insurance policy on the person who is the mortgagee. The mortgagor, the person who has borrowed the money, and then choose to use that life insurance policy to pay off the mortgage in the event of that person's death. Or you may choose to go and get a mortgage credit life insurance policy. It's up to you. It's simply a life insurance policy. So whether I call it a mortgage life credit insurance policy, or whether I just go and get an insurance policy to pay off the mortgage and then have a trust so that the home goes to the heirs that the mortgagee intended, the mortgagor intended, then you are going to be in good shape.
Thank you. Am I correct that a money market account is not a high yield savings account?
A high yield savings account can be based in a money market, but you want to go speak to your banking professional to see what the difference is between their money market accounts and their high yield savings accounts. So one clue to let you know if it's a high yield savings account, it's going to say high yield savings account. A high yield savings account is not going to be camouflaged as something else. It is a high yield savings account. So if it has any other name, it is not a high yield savings account. And if you have a question about whether the account you want to open is a high yield savings account, ask the financial institution, say, is this a high yield savings account? The answer is either yes or no.
Thank you. Okay, based off an earlier question, are you saying that having a home-based business can allow you to deduct your monthly mortgage and utilities?
If you have a home office and you are running your business like a business with the intent to make a profit, one of the things that you can write off in having a home office are the costs to operate that office. So one of the costs to operate that office is the rent of the place where you live. Another cost for that office is the electricity that is used to power up your computer. Another cost is anything in that household that helps to make that home office function. You can write off a percentage of those things. Absolutely. Yes, the answer is yes.
How safe is a reverse mortgage?
I'm not going to answer the question about how safe it is. What I will say is it is a Department of Housing and Urban Development program. They are not out to get you. They're not out to take your home. It is a program put in place for senior citizens 62 and older who cannot maintain their monthly expenses and need some assistance. So you get to decide what safe is. Safe is a subjective term. And I don't answer questions with subjectivity. I answer questions based on facts. So if it's a government program, I have a reverse mortgage counselor, I see the terms, then you get to decide how safe that is.
Thank you. Someone also mentioned, thank you for the clarity on high yield savings account.
Yes, a high yield savings account is a high yield savings account. It does not have any other name.
At this time, I do not see any. One just popped in as I was speaking. Are there any financial books you recommend? Great question. We read so we can read to help us with financial, I'm going to say wellness.
Absolutely. Living Check to Monday, the real deal about money, credit, and financial security has changed lives. People from millionaire status to, being in debt and bankruptcy to having a spending addiction. Find that book, short, funny, easy to read, and laugh out loud funny with practical steps that you can actually implement. The Symphony, a guide to creating and balancing multiple streams of income. Is exactly what it says. It's designed to help you not be a jack of all trades and master of nothing, but to help you put your income streams together and get them working for you. Yes, you approved the real deal about getting a mortgage and buying a home. Estate planning made simple. So I've got multiple books at lynnrichardson.com that you can take a look at that may help you in any part of your financial journey.
I have not run a business before and do not know how one should be run. Where can I get a mentor to help and how to structure a business?
You can go and hire an attorney to help you structure the business. You can choose to have a business coach, someone to help you with those steps. There's a class called How to Stop Living Check to Monday and Build Multiple Streams of Income at New Wealth University. And then we also have the Entrepreneurs Academy, which is designed to help you in every single phase of a business, from building business credit to you started a business, now what, to your LLC boot camp, your advanced home-based business boot camp, literally dozens and dozens of courses in every area, even doing business finances. So that's the Entrepreneurs Academy, available at lynnrichardson.com.
Okay. It appears that we have answered the questions that have appeared in the chat at this time.
Okay. Well, thank you, thank you, thank you. Hopefully, please send your questions for next week. And we are very, very excited about this series and all that it has done. Thank you so much for your questions today. They've made my heart smile.
Good evening, everyone. Thank you, Dr. Lynn. We hope that you are continuing to build your financial toolkits with the helpful strategies that you've learned over these last 9 weeks. I am Antoinette Rogers, Director of Programs for DREF, Delta Research and Educational Foundation. We thank you so much for joining us. And it is because of a donation, a generous grant from the Toyota Foundation, that DREF is able to continue to provide great programming such as this. We have the grant from the Toyota Foundation, but we are also able to do what we do because of generous donors. As we are now in the giving season, we hope that you remember to add DREF to your holiday gift list. There are several opportunities for you to give. If you are a federal employee, we encourage you to consider donating through the Combined Federal Campaign, which is one of the largest and most successful workplace giving programs. DREF is listed as one of the nonprofit organizations with the CFC campaign, and you can find more information on that at www.deltafoundation.net. We also want to remind you of Giving Tuesday, another opportunity to give not only to DREF, but to other nonprofit organizations. Giving Tuesday is Tuesday, November 28th, and that day has been set aside to help raise funds so that nonprofit organizations and charities can continue their great work. So on Tuesday, November 28th, Giving Tuesday, we encourage you to donate to DREF or another nonprofit or charity of your choice. We also encourage you to check with your employer to see if your company offers matching contributions. Many companies offer contributions that match what you donate to nonprofits. This is a very helpful way for us to raise money to continue the work. So check with your HR department about matching contributions. As always, you are able to donate to DREF by visiting our website, and I gave it to you, but I'll give it to you again, www.deltafoundation.net, and you will find that address in the chat. Prizes have been a wonderful bonus to this program over the last 9 weeks, and this week is no exception. We have some prizes for you, and we know that there are some people who are still awaiting prizes from previous weeks, and so we ask your patience with that. If you are waiting for your prize, please let us know by sending an email to fhwp@deltafoundation.net. fhwp@deltafoundation.net. Now, if you've already sent an email to let us know about your prize, be assured we've gotten it, so you don't need to resend. But if you have a question, or if you are chosen as a prize winner tonight, we'd like you to send an email to that address so that you can claim your prize. And for tonight's winners, we have a budgeting journal, financial budget planner. So we will need your mailing addresses so that we can get those to you. So let's get started with the prizes. And during the program, there were several questions dropped in the chat. And so we have some responses to those questions, and those persons will receive prizes tonight. The first question was, it was a question about adopting a giving mindset. Have you adopted a giving mindset? If so, share the name of at least one organization or charity to which you have donated since participating in this program. And last week we heard Dr. Lynn talk about the importance of giving so that we can receive, but to also clear out and just to help us physically and mentally and spiritually. And we have several persons who replied that they have donated to various organizations. We have Shelley W., who says that she donated to a senior center. We have Stephanie J., who gave to the HBCU College Educational Fund. We have Cheryl M., who donated to a ministry group for Thanksgiving meals. Very good. We have Crystal H., who donated to the Alzheimer's Foundation of Central Alabama. And we have Pat E., who said, and I like this one, I'm going to smile real big for you. She said that she donates to DREF. Yay! Thank you all so much for your spirit of giving and adopting a giving mindset. We had a second question in the chat that said, based on what you have learned from this series, define wellness. Now, you may remember that Dr. Lynn does not like to use the term financial literacy, but she does embrace the term financial wellness. So, Dr. Lynn, these are the definitions that we got from our respondents tonight. T. Tucker 88 says, financial wellness allows me to maintain day-to-day, have backup funds, and funds for play. So we can tell that T. Tucker 88 has been paying attention over these last 9 weeks. Yomi B says to her, wellness is having sound, accurate accounting, operating within financial means, and getting more income. Thank you for that, Yomi B. We had a third question, which asked, which stair step to wealth has resonated with you and why? TMAP 26 says, adopt a giving mindset resonated with her. She is ready to be debt-free, to give more, and build her retirement. Way to go. Tamika B also said, adopt a giving mindset resonated with her. She really values the advice to get organized and clear the clutter. Studious Persons is another respondent who said, get more money was the stair step to wealth that resonated with him or her, and having multiple streams of income has stuck with her or him. All right, and I do have a chance. Those are our on-screen, on-air winners for this week, so congratulations to you all. I am looking at the chat, and as a proud HBC graduate, I am thrilled to see that multiple people are planning to donate money to their HBCUs, and that is perfect coming off of homecoming season, because what people don't think about is that for every toilet that is flushed at an HBCU, for every light that is on during homecoming, the college has expenses. So way to go for those persons who plan to donate to HBCUs and all charities as you adopt the giving mindset. I want to remind you that there is a survey link in the chat. Please complete the survey link for a chance to win additional prizes for this week. The survey link is there in the chat. So please take the opportunity to complete that survey link so that you might be considered for an additional prize. As you know, Thursday is our last section. Next Thursday is our last session. And although we will be sad to end, we know that you have received rich information. And we know that you will help us spread this word of financial wellness by telling your families and friends to tune in. You may go back and watch all of the recorded videos on the DREF website as well as on YouTube. We ask you to spread the word for us and to stay tuned because we hope to have another series coming soon. If you need to contact us for any reason, again, you may send your email to fhwp@deltafoundation.net. This concludes my comments and announcements for this week. Congratulations to all of our prize winners. Don't forget to do the survey. The link is in the chat. That's all for now. Thank you. Back to you, Dr. Lynn, to close us out. All right. I think Dr. Lynn has stepped away. So I just want to come back and say again, thank you for joining us tonight. Please be on the lookout for any emails. We only need you to complete the survey once. I do see the comment and the question there. So do complete that survey once. And then at the end of the program next week, we will be sending links for a post-assessment and a program evaluation. Your completion of those instruments will help us plan effectively and to complete a report for our funder, the Toyota Foundation. And it will also help us plan so that we can bring you more great programming in the near future. Thank you so much. Are there any additional questions? I am scanning the chat. I do not see any. And I think that means that we are finished for this week. So check your emails. Be on the lookout for great announcements. And we will see you here next week. Same time, same place. Have a good evening, everyone.